Okay, hi guys. Welcome to the FX Street webinar. My name is Ian Coleman. I'm one of the traders and analysts at First Trading. Okay, we offer quite in-depth analytical reports for the 7 o'clock UK Open on up to 15 currency pairs, stock indices, and interest rate futures. Okay. Today we're going to be talking, or the theme of the webinar today is to talk about correction or reversal patterns and how we can spot them and how to get into them. Okay, how to trade the trend, how to have a long-term view. So we're going to try and cover quite a lot of subjects. I never have a script. What I try to do is not sort of ad lib and just go with the flow, but I like to have a sort of principle behind, and then for you guys to pop as many questions at me as you can, and we can see, where we get to. Now, the reason why I was a little bit late starting is because I've just gone out and pulled out this slide, because one of the principles that a lot of analysts look at is the Elliott wave principle. Okay, so the subject today is obviously corrective or continuation patterns. Now, in the Elliott wave principle, we have 5 patterns in one direction, which is what's known as the impulse move. Okay, and then three wave correction in the opposite direction, which is called obviously the corrective sequence, or the ABC sequence, sometimes an ABCD if it's the correct forecast. So I've just put this up just to show, because a lot of people will say to me, "Oh, what's relevant with the 161.8% extension, 261.8% extension?" So this is something that I've got on the slide. I mean, this is going back to 23rd of November last year. You can see here, let's just get a drawing tool. Okay, this is the 5-wave period. And what we're looking at is we're looking at these corrective sequences. So we've got wave 1 is impulsive, wave 2 is regarded as corrective, up to or around 50 to 61.8%. Okay, so this one's pretty good, the corrective second sequence. Down towards 161.8%, okay, is the impulse third. Now, the impulse third can't be the shortest of the waves. Okay, it doesn't have to be the longest, but it can't be the shortest of the waves. So this is our impulse third. We then get corrective 4th wave sequence, which again is normally in 3 waves. So impulse in 5, corrective in 3. And then down in what normally is quite a choppy 5th wave, okay, as the smart money is actually getting out of the trend and actually turning their books around. So we have 5 down, 3 up, with the corrective sequences being wave 2 and wave 4, and then obviously ABC. Okay, I just wanted to show that before we start, because obviously I do use fib levels quite a lot, and I just wanted everybody to be okay with a basic Elliott wave principle, and I'm sure most of you probably are already. Okay, so let's just drop this off. I'll just refresh the chart again. Okay, so Euro dollar this morning. Again, we're going to throw it out a little bit here. Corrective or impulsive moves. Now, on this CPG chart package, it hasn't actually got the tool that I'm looking for, but I used to use Pro Real-Time charts. Okay, and there's an angle indicator on Pro Real-Time charts. Now, when we looked at that Elliott wave principle a minute ago, remember we said that the impulsive moves are quick and sharp in one direction. Okay, so an impulse move, the angle of attack, if you like, is strong. So you can see this morning, let's just get this marking tool, okay. The angle of attack is strong, okay. So this angle is strong to the upside. Now, if we just drop this back down to 240 minutes, and we'll show you all the long-term analysis as well. If you missed last week's webinar, okay. So on our analytical reports this morning, put this as being in a channel, okay? And I actually had support here, so we missed the euro dollar buy trade this morning. We got into the euro sterling long trade, and we got into the euro yen long trade. We can't catch them all, but we had the correct bias. So what happens here, okay, from this level? So we've got again 5 up, and we've got 3 down, okay. And what's it finished with on? And again, I'm just going to move some of this off just to stop confusing you guys. Okay, so this is my buy level. What's it finished with? Well, now this chart package is great because we also got doji, but then this bullish 4-hour candle has formed a morning doji star, okay, which is a good reversal pattern. So we're in a downtrend, got a morning doji star, the bias is to the upside. Now we've been buying dips, we've been buying breakouts on this whole move up in euro dollar. And if we go to a weekly chart, okay, we can see that our bias is still to the upside. Okay, we had a small rejection, 125.98 we were actually trying for last week. We got the 125.90, I think, was the high trade. And then we've had this pullback. The bias is still to the upside. Okay, the weekly chart shows us in a trend channel. So we're still looking for that bias to the upside. So unless we get an impulsive move back down to show that the trend has changed, we should still be looking to buy dips. I'm going to get onto something else as well in a minute. So why did we pull back? Well, we got up towards the daily cloud top, okay, close enough to 161.8%, and then we drifted lower. This was then our support. So this support level came in at 124.55 this morning. That's what I'm saying. We're just looking for, or I was looking for a bit more of a dip to the downside to trigger a long trade in euro dollar. Now we're clearing this this cloud. So we've now broken to the upside. All the biases, okay, so we're above 50 on the RSI, okay, everything is to the upside. What are we going to end up with today unless something drastically happens and we reverse all the way back down to the open? We're going to get an outside bullish bar, okay, so an outside bullish bar on a break. This has obviously got to be broken first, 125.98. If it does, then we've got a good chance of getting up here, 127.49, and even possible towards 129.40, okay, in this choppy last wave up, if you like, okay. So we've got our overall view that gets us in. Now, our short-term triggers should be inside bars or outside bars. So in other words, when we see inside bars at relevant highs or lows, which we have it here, okay, so this was a previous area of support. It then became an area of resistance. We get an inside daily bar. It's not only an inside daily bar, but it's also a doji bar. And that basically tells us to, even though we've had a very impulsive move up, it warns us to be cautious, okay? It's indecisive. It's an indecisive inside bar, as I'm always putting in my reports. Okay, we then move down. We then get the trend, okay, off this channel. We then post an outside bullish bar off the trend. The bias at that point, you have to be either looking just to buy outright or buy dips. Okay, so again, just test to the downside and then breaks up. Today, again, continuation bar this time. It's not a reversal bar because we're not in a downtrend. We're in an uptrend. So it's a continuation bar. And then we want to get it down into shorter time frames. Okay, so here this morning, I'll just show you my settings. So I've got an RSI 15, I've got an RSI 8. The reason I have an RSI 8 is because it's more reactionary to overbought, oversold. If you can actually see at the moment, shooting star. It's an inside bar. We're going to talk about this correction because this is impulsive. So we don't want to be buying the top of it. We want to be getting in on the pullback, okay, to take us further up. So going back to this morning, my trigger candles, if I'm looking, what happens in an uptrend? Now, the basic thing that happens in an uptrend is we have higher highs and higher lows. In a downtrend, we have lower lows and lower highs. Now, if you remember that, if you keep that in the back of your mind, okay, so we get an inside bar which shows indecision. We then move up to our moving average, which is our first area of resistance, okay? And then if we take this down to a 5-minute bar, we want to be looking, the wrong bit, okay, for corrective sequences. We then want to be looking for bars that are out of the ordinary, okay? And by that I mean a strong inside bar or a strong outside bar, okay? So here, this morning, we grind up. What do? We get a free wave correction. What happens at the end of the free wave correction? So we've got this a higher low, and that's our first, not trigger, but it's our first technical point that warns that the upside or the downside might be halting. What we get is this here, okay, this bar, okay, this outside engulfing bar. Now, how do we know if it's a powerful outside bar? Because it could just be consolidating. We could have been consolidating for the last hour, and you just get an outside bar, and it's not very powerful, etc., etc., etc. You know, you've got one in the middle here. All right, if you take it higher, I'm trying to find one that didn't take us higher. Let me just clear this off for a second. It's at the base of the free wave correction, but then we take the length of it, okay? So we take the low, 124.77, we take the high, 124.87. So it's a 10 pip range. Is that out of the ordinary? Well, we've got our ATR down here. This is our average true range. So we take the level from here and we go down to here, okay? And at that point, we hover over the box, okay? And 7 is the average true range, and again, it's a 15 setting for me. So I know that that's an out of the ordinary engulfing candle, okay? And from that point on, I can either buy at the close, or I can look at buying a small pullback. And for that, believe it or not, I look at 3-minute bars. And the reason I look at 3-minute bars is because I want to be more reactionary, okay? And a lot of futures traders look at 3-minute bars, and that's probably the only reason why, really. So we pull back. This was that 5-minute bar, okay? Get a few indecision candles. Again, look, that's a bearish engulfing, okay? So 2 bearish engulfing candles off the top. But are they out of the ordinary? No, they're not. You know, they've got a high of 88, a low of 84. So 4 points come down to here. What's the average candle size? 5 points. Okay, so it's not really bearish. And then we come down, and then we get this insert. This is actually reading it as engulfing candle because it takes out the body. But it's not, as far as I'm concerned, it's an inside green. Okay, you get the inside green bar virtually halfway, or the Marabuzzo level of your trigger candle. Okay, and that area is your prime spot to pull the trigger. Okay, your risk reward is very good because the first area you're going to take some profit is the break of the high, and your stop can be placed underneath the low, okay? Because this is your candle, this is your trigger candle, this is the one that you've initiated your longs from, okay? And obviously the rest this morning is history. So we've seen it run up, we've seen it go impulsively after this free wave correction lower, okay? So we've had this free wave correction lower. This was our impulse third. Blah, 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 the rest is history. So how do we get in? Well, is our bias still bullish? I'm still bullish daily. I've got an outside engulfing green. I've broken the daily cloud. I'm in a bullish channel. I could potentially, risk reward could be superb because I could get up towards 261.8%. I actually cashed in on my personal account at 47, at 125.47 on this trend up this morning. Where are we now? So just underneath. Okay, so going back to how we can get back in on this trend. Okay, so go back to the daily. So go back to the 60 minutes. Now, where is our area of support and resistance? Well, our area here we've had this breakout. So this is our, now becomes our area of support, okay? Because a lot of the time we will retest channel breakouts. So we put a line on there. We've also got our moving averages merging at the same level. So that's a good area of support, okay? And if we make it down to this level, this RSI, the 15 RSI, is probably going to be sitting just around the 50 level. So it's gone bullish, it's hit overbought, okay, and then come back to that central area, okay. So we've got an inside shooting star or inside Arami candle, which shows us indecision. Go back to 15 minutes. Okay, overextended through 261.8%. We paused here, 161.8, and this candle, this green candle here, is actually a pullback. It was very mild, but it was off the trend, off 161.8%. So we hit it, we pulled back, we broke, we then pushed up, overextended higher. Now, probably for the next few hours actually, I'm expecting choppy reversal. So again, off my levels, 1, 2, 3, and probably 1, 2, 3, and 1, 2, 3. Okay, and looking then around this area, don't get too greedy, but around 125.19, 125.10 for some bullish signals. Do you think that the Gangstar, that Euro-dollar might have topped for the day already? No. It's quite early, really. 20 past 12. We've got some US figures this afternoon, haven't we? We've got consumer confidence at 3 o'clock. That'll probably be the catalyst, I think, that will pull it back to put it back lower. I'm just telling you what I'm looking at, and then I'll be looking around that area. My personal account have already cashed in, so this is I'll be getting in cheaper, and I'll be going for a longer run. So bullish Gartley forming in the next few days. I haven't spotted it, to be honest. Let's have a look. No, this is a 15-minute chart at the moment. Bullish Gartley on the daily. Get rid of some of my madness. Bullish Gartley on the daily. Can't see it myself. So it's going to be bearish Gartley, then around here, 78.6%, I would have thought. I can't see a bullish Gartley. You mean off this? Sorry, it's just somebody saying, so you're looking at a Gartley today. Well, only if you've got, maybe. This correction is just going to be off the top though. I don't think it will retrace to 78.6%, which is obviously the Gartley level. 78.6 is down here. I think you'll be lucky to get 50 or 60, between 50 and 61.8%, I think. It's not really a Gartley. The upward move really should have been a la, in one direction. Getting a few requests in today, aren't we? Aussie dollar, sterling dollar, all the yen pairs. It's not really supposed to be forecasting today. That was last week. Today we're supposed to be looking at trend reversals or continuation patterns. But we'll just plod on because it all ends up being the same thing, doesn't it? Hey, cable. Well, for euro sterling first, because that's quite important. Let's just refresh the camera. Okay, weekly you can't really see too much there. Just up against some resistance at the moment. Daily. Again, these I always leave my charts as I see them, and then I can sort of work around them and show you what I'm getting at. Okay, so euro sterling this morning. Again, yesterday was an inside bar, so we're in an uptrend. We've moved to the upside. Okay, we had a reversal or a correction. It extended past 161.8%. And yesterday's inside candle. So what got us bullish this morning? Why did we look to buy from the open this morning? Okay, so we're going breaking it down. So we've got to keep our eyes open for chart patterns. Basically what we can see. So we know we've got a top in place here, or we had a top in place. And then we've got just a trend of higher lows, okay? And again, I'm not particularly bothered when I get outside or inside bars. I'm not particularly bothered about whether or not it's a bullish or a bearish candle. So if you can see here, this was a bullish pin bar. Excuse me. Fun and games are working from home. The guys now, the judge next door is having his edge trimmed. Yeah, I mean, you can't have a bullish bar and then a bearish bar with a bearish bar body higher than the bullish bar. So that's a bit of that's a wrong candle basically there. But what do we have? Okay, we've got we've got an outside bar. So we've got an outside bar forming at 7 o'clock. Okay, it's above or it's off the trend of higher intraday lows. And then we break it down into shorter time frames. And basically what I'm looking for, again, is I'm looking for higher lows, I'm looking for spikes, I'm looking for anything that tells me aggressively that level is being rejected. And again, we have these here, okay, so we've got an array of spikes. So this is the main candle. High is 12, low is 06, so it's got a 6 pip range. Okay, we go down again to the ATR, it shows that 4.8 is the average range. It's not a great signal, but we're already in it anyway, to be perfectly honest. I don't know if the 3-minute bar gave us much more. No. The only trouble is if you start taking the bars down too low, especially in euro sterling, when there's quite light liquidity, there's actually spikes in all sorts of directions that you'll get confused. I mean, I'm now out for the day, euro sterling, but I am still bullish. Okay. It needs to make a higher high. This whole weekly move or daily move, okay, was down towards 261.8%. Now we should at least get a free wave correction. Now, the reason I've got a fib on here is because 79.58 lines up quite well. We just rejected cloud top at the moment. I think the move lower is a correction, not a reversal. Okay, I've got support here at 79.31. If it is to be an ABC correction, it must at least surpass this high, okay, which is 79.64. So I am out for the time being, but I'm also still looking to get long again. Okay, out on the inside bar, mainly out because of the euro dollar retracement. Okay, so using a little bit of correlation, not expecting cable to go anywhere at the moment, and basically looking towards this level. So we're looking for a move back towards my moving average. So the moving average is going to move up, this is going to move down, and again, if we put it down into short time frames, 15 minutes is probably not ideal. Just to show you, impulsive move up. Okay, corrective or a flag formation lower. Okay, I wouldn't take a break of this because I think it's got more to do. 1, 2, 3, 1, 2, 3, and then 1, 2, 3, back down towards sort of 79.31. So I'm looking at the strength of the trend. You can tell how strong a trend is, obviously, just by how far the moving averages gap. Okay, so the trend is strong. It's now coming. There's now coming back in together as this corrective sequence unfolds. Okay, and then again, same scenario as euro dollar. We'll look to buy in on a dip. A pretty tight money management, and then 79.64, like I said, being or above, being the target area. What about the inside monthly bar on euro sterling? There's not one picture. It's not, FX isn't one picture fits all. I mean, I've been looking now for 20 years for some sort of holy grail where I don't have to analyze anything. I've got to open the door again because I'm absolutely roasting now. Hopefully they won't start off again. Yeah, some sort of holy grail where I don't have to analyse the market. I just keep on pulling the trigger, off a 1 minute chart or a 5 minute chart or whatever. And even my son has done me a big poster in front of my workspace that says, "Stop analysing, Dad," because sometimes I will have a tendency to overanalyse. But as long as you get your bias correct, and then you read these candle formations, I think you'll definitely end up with more correct trades than incorrect trades, or more winners and losers. Would I buy this euro sterling to break the flag? No. Okay, I've been long euro sterling a while, but very long-term monthly chart trade. Yeah, it's going to be an inside month, but then the move it's bound to be. I mean, I've said we're in a corrective sequence. Corrective sequence are made up of three waves. They're not impulsive. So an inside bar, I think, looks good for the analysis. This whole thing, I mean, this is a monthly chart. You've got 1, 2, 3, 1, 2, 3, 1, 2, 3. Well, this is actually down in 5. So I think it's based out, but I'm only paying the corrective up at the moment. Weekly we're in a channel. Put it this way, I went on holiday in August and I got my euros in down here, so I was quite happy, really. There's nothing that would make me want to get short in euro sterling at the moment. Put it that way. Somebody just said there, would you buy if that flank breaks? You could. I'm not here to tell you what to do. You could buy the break. There's nothing to say that you can't buy the break. I might miss it. You could buy the break and just buy small if you're nervous about missing your anticipated move higher. You traded that well. Yeah. Well, I was away for 2 weeks 10 days in August, which was nice. I don't, like I say, I think fair value in euro sterling is really about sort of 81, 82, but we're talking about sort of the next couple of days, or I mean, in some cases, the next couple of hours. And we'll just trade what we see. You know, if we get some reversal patterns, then we'll see if they're relevant. We'll see if they're aggressive. We'll see if they're at any relevant support and resistance levels. Right, let's have a look at what else have we been asked to look at. Aussie dollar. Aussie dollar's a waste of space at the moment. It's in a corrective channel lower. You've got an evening star formation on a weekly. It gave it a bias to move to the downside. Out of all the currency pairs that are out there at the moment, your Aussie dollar is probably the one that I'd leave alone. I will show the chart, but it's bucking the dollar trend, put it that way. So this was, goes to the weekly. And you've got an evening star formation, large triangle formation. There's some support coming in soon. My daily report actually was to buy a dip a bit lower down. I think I put it in at 36. Yeah, so looking to buy a dip at 36. Which doesn't still stands really. I've not taken it off our website yet. It looks like an ending wedge. I mean, we're getting ATR, average true range, is lower. We're still actually making lower lows and lower highs. It would sort of line up pretty much with the euro dollar bias of buying the pullback. I'm not allowed, just to get one thing straight while we're sort of all listening, I'm not allowed to tell you to buy or sell. Clients who subscribe to our analysis, we say buy, sell, because we are FSA regulated, and I'm allowed to. Through FX Street, I am not allowed to tell you buy or sell currency pairs. I can say where my buy levels are, etc. I'm not getting. Yeah, I mean, I'm because I've got that bias in the other dollar pairs. I can still see this as just being a free wave correction in Aussie dollar. Will it make new highs? I don't know. It's got a long way to go to make them. But I think to sell at the base of this downtrend would be, you know, you've missed the boat really. I think it's now to look to buy a correction. Cable. Again, cable's not been as strong as the euro dollar trigger this morning. My bias is still to the upside. I'm still looking for a triangle breakout. I still think around 62 the figure you can get to. This was 61.8% pullback. So basically this move here. Okay, good reason to get short around here, 61.8% of the whole move. One of my candles, that's market profile, which is a whole new different subject. So we go to 240 minutes. No problem. Okay, got a trend of higher lows. I haven't got any fib extensions, etc. I'm just purely looking for price action. But I think down around this level, again, I was trying to buy a dip lower down this morning. There's nothing here to really get me bullish yet. Okay. This still looks corrective. It's just in three waves. I'd look for a further dip down towards sort of 157.42 before I'd attempt longs in cable. As I was saying earlier on, you can get correlation of your currency pairs. So obviously I'm very bullish in euro sterling. So if we're very bullish in euro sterling, which one of those currency pairs? If I want to buy one, I've got to be buying euro dollar, not cable, because I obviously have that bias that euro dollar is going to move higher. And that's why we bought euro sterling and yes, euro's more preferred, and euro yen this morning. There's not. This market is pretty choppy at the moment. I mean, we can all talk about trades that we have taken or missed or should have taken, etc., etc. But when you just, I'm going to show you the DAX at the moment. I mean, this is an expanding wedge formation. Okay, it has a bias to break to the downside eventually. But it really needs to get underneath last week's low, which is sort of 68.85, to give this some sort of downside momentum. At the moment, you know, we consolidated for nearly 2 weeks up around sort of 70 the figure. We broke up and then had an aggressive down day last week. The weekly looks pretty bearish. But it's not an outside bar. No, there's not. And then obviously trading this week's just inside. So we just got to be careful. We can't force trades to happen. And we just got to read support and resistance and try and trade off those support and resistance levels until the trades do happen. Go back to euro yen. Okay, it's a bit messy, but you want your currency pairs to correlate. I mean, that's one of the essential things. I write down my 8 majors at 4:30 in the morning. Okay, I then analyse every pair. So this morning I've got buy at 124.60 for euro dollar, buy at 157.43 for sterling dollar, then sell at 96.50 dollar Swiss, blah 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 blah, all the way down. Once I've analysed all those 8 currency pairs, I then look at them all and go, can that happen? Is that feasible? Can I have that one in that direction and that one in that direction? You know, because I've got to have these correlated pairs. Otherwise, I've got one incorrect. Then I have to reanalyse and try and work out which one is incorrect. This morning, this was a previous area of support. A previous area of resistance. It now becomes an area of support. Okay, so we then go down to our 60-minute chart, or actually our 240-minute chart, which I've done most of this work over the weekend. So I'm in a corrective flag or a channel formation. I know I've got support around here, okay, because I've put my blue line in there already. Then when I started analysing at 6 o'clock this morning, remember our trades don't actually go live until 7 o'clock UK, but it's at 4:30 this morning, and euro yen's the first currency pair that I analysed. This is what I see. Okay, I've got support, I've got 2 inside bars, so I'm in a corrective channel. I've got indecision, which is my inside bars, and I'm near my support level. So obviously my call was a buy with a stop underneath the low. Where do I think now? Well, what normally happens is we'll break out, like I said, of the channel formation, and then sometimes, as we've done this morning, we'll spike up, or then look to correct back in before the next move higher. And again, this is pretty similar to euro dollar. In the fact that I don't think the upside has got that much further to go before we hit resistance again. Okay, we're going to get an outside bar today. 93.36 is sort of next resistance level. So the call or what I'd be looking at doing at the moment, is buying the pullback. Whereabouts would I expect the pullback? Well, in this sort of zone here. Okay, get rid of this fib, get rid of this one. What is it? What has happened this morning? Well, we've had an impulsive move. Okay, so now we have to be patient. We have to wait for the corrective sequence. Okay, this is 50%, which is 98.37, and this is 98.26, which is 61.0%. I don't think you'll get that low. I think 50% pullback will be the max. Okay, with a lot of support and resistance or previous price action coming in here. Okay, around sort of 98.40 odd, 98.42, 98.37, and then expecting it again to come lower in a corrective sequence. So 1, 2, 3, very small inside third there, and then a move up. It's probably on its way back down now. So something along those lines. And again, looking to sink out of the ordinary around this level. Now, going back to this morning, you've missed the trend. The trend starts moving away from you. You worry about your risk reward, but you've seen a count and you've seen a trend channel, and you think that you're at least going to get 98.60. How can you get in? Well, again, you wait for periods of consolidation. You wait for a bullish continuation pattern. And here, okay, inside bars, this is our first warning. So we get an inside bar, another inside bar, then we get a small pullback. Okay, this candle here, the high and the low, okay, 9 pips. Let's go down. Is it out of the ordinary? Yes. So 6.5 pips is the average price range. And that's after moving up from sort of 4 pips overnight. Okay, so even though we've had this first impulsive move, this candle here is out of the ordinary. Okay, and at that point, if you missed your initial move, you can buy in, stop underneath the low, and look for breaks. Okay, moves up. This was the support level that we talked about. Okay, hovers around it, breaks to the upside. Okay, I do change time frames quite a lot. So I look 3 minutes for triggers. Okay, then I look 5-minute candles. Is there anything out of the ordinary? 10-minute candle, and then a 15-minute candle. Okay, but what I really want to see is if I'm getting something out of the ordinary, I want it to be relevant. It has to be a relevant high, a relevant low. It has to be a fib. Does it look like an overextension? Can I see a correlation or a correction with another currency pair? Okay, and that's quite essential. Now this pin bar up here, high and low, going at 8 pips, sort of coming down here. Our average bar has been 10 pips in the last 52 bars, so it's not an aggressive rejection of the high. It is a reversal. We're seeing this free wave correction, but these candles, they're not deep. They're not, you're not getting a 15 count on a 10-minute bar. They're small corrective candles lower. Okay, any questions about what we've covered up to now? So basically, what we're looking for is, I'd love to say, it's easy, because you just look to see whether or not it's corrective or impulsive, and away you go. But it's really about having a look to see whether or not they're consolidating periods. Are there any impulsive candles in there? 4 hours, daily, 60 minutes, 5 minutes, 15 minutes. Are there any particular reasons why the market should act so aggressively at that level? Is it impulsive? Has it gone up very aggressively in one direction at an acute angle? Is it corrective? Is it just gradually grind lower? Can I see a fib extension level? can I expect a pullback so I can get a better entry? What's my long-term target? Now, if you can add all these things in, and then basically just try and read the chart. Are we making a lower low? Are we making a higher low? And look for levels to break with impulsive candles. You will catch some of these decent moves up or down. Do I use the dollar index to compare dollar pairs? No. I don't even have the dollar. I don't even pay for the dollar index on this charting package. I just use correlation really between them all. Can we also have a look at dollar CAD? Dollar CAD, I'm bearish. Again, trying to pull a. This was my trigger level this morning, 99.32, and I didn't get it. So I've missed it. I've missed a few this morning, but I've also caught sort of quite a few nice trends as well. So I'm not too fussed. I think this is the daily chart. I think that dollar CAD eventually takes the low. I think we get down towards these sort of levels, okay, which is sort of 1996, 98, 96, 68. It's not going to be an easy ride on the way down, but that's definitely the bias. I mean, if you look at this morning, or this daily chart, okay, resistance comes in, spike up, then we get what we want, which is the insider ramen, okay, shows investor indecision, and then we move lower. And really, from that point on, you should really be looking at just selling rallies. But again, it didn't look very convincing to me this morning, and I thought we were going to get a higher move. We did get an inside bar, but like I said, I haven't caught this one. I mean, you can note here, okay, downward moves, how aggressive are the candles? Okay, these downward candles are far greater, okay, than the upward candles. So the average, you can tell that the upward moves are more corrective, and the downward moves are more impulsive. Obviously not here. We formed a bullish outside bar and had a good rally off there. But that's all I'm looking to. I was hesitant to, because it was moving aggressively on Euro session. See what Euro dollar's doing there. Not a lot. So a grind lower, I think, for the into the afternoon session. Okay, guys, I'm going to call it a day. I hope you've enjoyed it. If you want to have a trial of our analytical reports, then feel free. It's www.first4trading.com, and the 4 is a number 4. We do a 1-month trial at the moment, as I said. If not, I hope to speak to you again next Tuesday, and good luck with your trading. Okay, guys, thanks very much. Bye now.